The Dow tumbled nearly 700 points on Friday's strong jobs report boosted the case for the Fed to hit the pause on a January rate cut. Joining us now is Tom Lee, Fundstrat Capital CIO, head of research. He's a CNBC contributor. And I referenced you earlier, Tom, because I do remember you sort of being positive overall about the market and for this year, but with some trepidation near term. And most of your calls recently have been less on the strength of the economy and more on inflation data. And some of your, like when you were calling things, S&P is going to end the week, 8% higher because of inflation or something. So we got inflation this week. There are concerns. I think I tie a lot of the weakness in the market to that. Are these important numbers?
It's important because, as you know, we've been correcting now for almost a month, right? 23 trading days. And this Wednesday is an important day because it is a possible turning point for markets. And I would like to see CPI come in below, 0.25 or so. And I think that would give that jolt of confidence for markets on top of, I think, earnings, which is going to be a positive catalyst. But for investors in the near term, I think they got to ride out the volatility because I think yields here have made people nervous. Not necessarily deteriorate the long-term outlook, but near term.
Are they smart, the yields, or are they not giving us a correct signal? Because you sound really like you're not sure about the inflation data this week.
I'll have a better sense over the next couple of days as we sort of finalize what our expectations are. But the only hesitation we have is that the hurricanes last year have muddled some of the inflation quality because, for instance, hotel reservations would go up because of these natural disasters, and it's going to happen now with the LA fires, and I think it's going to muddle used car prices as well because you have to replace all these used cars.
So you think if they weren't muddled, that inflation isn't that big of a concern? And when you say a turning point in the markets, if we've been down for a month, turning point doesn't mean further weakness. You think we might be making a bottom this week?
Yes, our technician, Mark Newton, thinks 5,700 might be the turning point. It could happen Wednesday, so maybe 2% down from here. But that's really where the market could make a stand. I think if we could lift the cloud of some of this muddling, in fact, Waller last week even said most of the inflation last year was about imputed prices, meaning the real price of inflation was actually much lower. I think that is still the case. Inflation is weaker when you look at housing, et cetera. So once we can get through that noise. But investors, I think, shouldn't be too glum. I think earnings season is going to be something that really solidifies. Look, if S&P earnings growth is 10%, X energy and revenue growth 5%, that's a really good reason to be owning equities.
Recently, the co-founder and head of research at Fundstrat Global Advisors, Tom Lee, has sparked a buzz among investors. He states that Bitcoin, despite its dizzying highs and tumultuous lows, is set to become one of the year's top-performing assets. However, before this bounce-back triumph, Lee suggests that Bitcoin might need to brace for a steeper drop. Welcome back to Investocracy Crypto.
Is the Fed less significant right now with their rate cut? I don't care whether they, that's not what I base what the market's going to do on. Are people still just dying for another couple of cuts, or I think we're lucky to have gotten what we've already gotten. We got to live with that and just try and hope inflation doesn't come back.
I agree with you. I think the best case this year would be the Fed doing one cut because the economy is strong enough and they're still dovish, meaning they're going to make their way to neutral. But if they push those rate cuts into 2026, 2027, that's a longer run rate to support markets. Part of, I think, the hesitation for stocks right now is we have a new administration starting.
What? Oh, that's right.
Yes. And, we essentially reversed that rally from November because we rallied 7% over 23 trading days. Mm-hmm. And now we've given up 5%, and another 2% would just round trip us back to November.
In 23 trading days.
Do you think stocks look expensive here or not? I mean, we've come back down, as you mentioned, but people keep talking about the PE ratio and how it's historically at the high end of things. Do you think it's expensive, or do you think we have the earnings power to support all of that?
To me, the 10-year, even if it gets to 5%, is a 20 PE multiple on a 10-year bond. Mm-hmm. The median PE on the S&P is 17 times. So I think stocks are giving you much better value than a bond right now. And 5% is probably not the level that yields stay at. It's probably a deflection point.
Tom, what is the movement in Bitcoin say to you? So we're at 91,000. What is that? What is that a signal or a sign of anything in this sort of analysis?
Stupid Fed.
Yeah.
It's not cutting.
Yeah, Bitcoin's down roughly 15% from its highs, which for a hyper-volatile asset is a pretty normal correction. And it is slightly following global liquidity, but we're pretty early in this halving cycle. So to me, I think Bitcoin in the near term, again, our technician thinks 70,000 is where we can sort of make a stand. Means you're getting a big opportunity because I think Bitcoin's going to be one of the best performing assets.
So, hold on, but you still think it goes all the way down to 70,000, or you think that's the floor, in which case you would still buy at this price?
Yeah, so there's Fibonacci's. So one level would be 70.
Let's say that again.
There's retracement levels. So
Yes.
You pull back from where you rallied.
Right.
So 70 is one level. It could go to as low as the 50s. But that's, again, not a new level. It's just where it touches before it begins to rally.
Okay, let me ask you a different question. For those folks who are watching who are not in Bitcoin or are thinking about buying Bitcoin at these prices, are you saying that this is a fair and good price to get in, or are you saying wait because you think it's going farther down?
You know, Bitcoin is something you need to be long-term focused. I don't think anyone's going to lose money buying here at 90. If they're trying to time this, maybe they'll get lucky and it goes to 70. But to me, Bitcoin could be significantly higher this year, maybe 200, 250. So I think 90 is still a good entry point.
In an engaging conversation with CNBC, Tom Lee painted a picture of Bitcoin's future that was as intricate as a tapestry, with threads connecting market trends, global liquidity, and the cryptocurrency's notorious volatility. Lee shared that Bitcoin experienced a 15% dip from its pinnacle, a mere hiccup in its hyper-volatile journey. Mentioning that the correction aligns with global liquidity trends, Lee emphasized that we find ourselves in the nascency of the halving cycle.
Bitcoin's bouncing today. It has been a shaky start to the year, to say the least. Our Tanea McKeel says it could be a tale of two crypto trades under incoming President Trump. She joins us now to explain. Hi, Tanea.
Hey, Scott. Yeah, that shakiness could definitely continue through the first quarter. That's what traders are telling me after tariff concerns dampened enthusiasm this week. Remember, crypto is, of course, one industry that stands to benefit this year from a pro-crypto White House and Congress. So Bitcoin rallied more than 45% in the month after the election. So on the tariff concerns, that's a theme that extends beyond Bitcoin, but it highlights these two opposing aspects of the Trump crypto trade now coming into conflict. So on one hand, the promise of better regulation that could help crypto companies versus parts of the agenda like tariffs that could strengthen the dollar but then weigh on Bitcoin price. Those two things have an inverse relationship and, of course, introduce risk to markets broadly. So a choppy quarter ahead before Bitcoin makes a run at a new record. But I don't want to overstate the risk long term. It's been a year today since the approval of Bitcoin ETFs, and I'm told their popularity combined with better regulation could still support a doubling in Bitcoin price this year, and that the market should feel confident that Congress is going to take up crypto issues like stablecoins and or market structure. But even there, the impacts may not be felt until the end of the year. Scott?
All right, Tanea, thanks for setting that up for us. Appreciate that, Tanea McKeel. You want to talk about that, Bill?
Yeah, absolutely. We own Bitcoin, IBIT, in portfolios, and we actually are looking to add to that at some point here over the next month, increase the positioning. It's right around just under about a 1% holding. I also traded in the futures as well. And, I think what we've seen here, obviously this big run up and a nice, healthy consolidation. On one hand, I think this, in a technically bullish market, you get a pennant building the way it has, and it leads to higher highs. On the devil's advocate side, the only concern I would have here is if we get sort of a buy the rumor, sell the news from the inauguration, and we get a little bit of a shakeout of weekends, which actually wouldn't be so bad. You shake the weekends out, and then you make the next move higher.
I think the key thing here is a little bit of be careful what you wish for. For like 5 years, one of the biggest catalysts for bulls was that at some point we're going to get crypto ETFs. And then, of course, that day came a year ago. IBIT, BlackRock's product, became the most successful ETF launch any asset class in the history of the ETF wrapper, and got up to like 54 billion. What happened last week, though, was its first really big daily outflow. 337 million came out. I think all of the Bitcoin ETFs in total are probably negative 2 or 3 billion since middle of December. And now these are financial assets. So I don't know that they'll be much less correlated than they used to be relative to the stock market. I think on risk-off days, they'll be treated like risk assets, which is what they are. So it's great. It's democratized. Everybody could buy it. It's easy. But remember, what that means is the money comes out easily also. And that is a little bit of a change from where we were prior to these ETFs becoming as large as they have.
Would those outflows have been on long-term taxable gains? It was over a year. Would that have anything to potentially do with the outflows?
I doubt it. I doubt most of the money that came out of the stock necessarily went in precisely 1 year to the day, or 1 year and 1 day from the launch, but probably some. Okay. Look, we don't know how these things are going to trade relative to the market. All we can say now is they are now part of the mainstream market. They're in people's brokerage accounts, and that's got really great attributes to it, and it also has potentially negative attributes to it.
Diving deeper into the speculation game, Lee shared Fundstrat's crypto technician's insights, suggesting Bitcoin may plummet an additional $20,000 before finding its footing. While $70,000 was discussed as a potential rebound point, Lee cautioned that Bitcoin could flirt with even lower levels, perhaps touching around $50,000 before its anticipated resurgence. Bitcoin, Lee remarked, is for those who are in for the long haul. Analyzing data and sentiments, Lee's predictions resonate with Bitcoin's current trajectory, worth $91,731 at time of writing, down 10% over the week. This speaks volumes of the inherent risks and volatile charm that cryptocurrency holds. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, I think Bitcoin is continuously proving its value to more and more people. More people are beginning to realize it, and as more people realize just how revolutionary and important this is as a monetary technology, more people buy it, and the price keeps going up. It's been going on for quite a while, and I think it's going to continue because ultimately, Bitcoin is a money that cannot be inflated. Nobody can make more of it. There's only going to be 21 million. That's it. And it's just such a simple fact, but it is so unique because no other form of money can credibly claim such a property. And that means that eventually everything continues to decline next to Bitcoin because you keep making more and more of everything.
And it gets a little bit far into the weeds, but I was looking at some of your comments here. I'm just fascinated by it. And we want to get back to the real world and what it means for people with regulatory issues and where we are in the genesis of Bitcoin. But you point out that fiat money and the monetization of debt, which every time the government does something, it's basically almost like mining gold, except in this case, we just increase the supply of the existing money to pay for what we're doing. And that's never going to work. And even when you're off the gold standard, gold has a stock to flow. We can only make so much per year, or produce so much per year. Same with Bitcoin until we hit 21 million, and then there's no more produced. And at that point, that will be the stake in the ground to value all other currency, right?
Yeah, and I think that's really ultimately what it comes down to. The thing that made gold money, why gold became money, was that it's supply. It wasn't
jewelry, Safe. It wasn't. Everybody thinks, and that's the misunderstanding of what money is. It's not because you can make a nice ring out of it. There's characteristics of why gold for 4,000 years has been used to represent value. But it has nothing to do with what it's used for.
No, it stores value well because it's very difficult to increase the supply of gold. It's very difficult to increase the supply of gold substantially. Every year, the supply of gold goes up at only around 1.5% to 2%. And so that means that people who hold it as money end up doing very well for themselves, and people who hold other things don't do well. And that is true for gold, and that's what made gold money for the whole world practically at the beginning of the 20th century. Then governments come about, and they use their debt as money, and since then, the average over the last 60 years or so, between 1960 and 2020, for 60 years, the average fiat currency grew in supply at around 14% per year. Or overall, fiat currencies grew in supply at around 14% per year. So we went from 1.5% to 14%, about 10-fold increase in the supply growth rate. And 14% per year means that on average, you lose half of the value that's stored in money over 5 years. So you lose half of the value of your money over 5 years. That's the average fiat experience. Of course, some currencies are better than the average, like the US dollar and euro. They only increase at around 7-8% per year. Some currencies are a lot worse. They increase at 20, 50, maybe 100 sometimes percent per year. But on average, it's just continuously increasing in supply, so its value declines. And because its value declines, that incentivizes everybody to A, not save, and B, take on a lot of debt. And that's why everybody is in debt. And that's what Bitcoin fixes. If we go back to having a hard money, where money is no longer debt, we no longer need to be monetizing debt. We no longer need to get everybody to become a debt slave in order for us to have a form of money. We have a form of money that is just a commodity that doesn't require anybody to get into debt for it.
While Tom Lee's projections point to a rocky path ahead, they also spotlight Bitcoin's tremendous growth potential in the long term. Presently, Bitcoin stands as an emblem of market audacity, exhibiting fluctuations that compel both seasoned and novice investors to ponder over its possibilities. Forecasts remain optimistic, predicting that after enduring short-term dips, Bitcoin will soar to new heights. For those contemplating an investment, the current landscape offers a fascinating opportunity to jump on board during its unpredictable journey. What's your take on Bitcoin's next leap? Do you see it as a promising investment for the future or a gamble in the making? The dialogue on Bitcoin's future is far from over, inviting endless analysis and intrigue. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.